Hello everyone, hope you all are doing really well in your homes. We may be on the verge of a nice move in cryptocurrencies and a continued short squeeze in traditional markets. Let's have a look at what's going on. Here's the total market cap chart on the weekly time frame, and you can see that we have just been continuing on. While the sentiment has not been overly bullish, this is what bottoms are made out of, guys. We've basically had 6 weeks, and you can see over the last 3 weeks we have been having bigger candle bodies, expansion. And look at this week compared to all the weeks before this. Look at the tops over here. When you look at the wicks, there's big wicks right here, price failing to close, a lot of uncertainty in the market. We had a nice move reclaiming this major 180 level. This was the level I was telling you guys to manage support from, and you can see that the higher wicks are starting to get smaller and smaller. And just look at the supply from last week. So everybody who was in disbelief has now switched their frame of mind. If you look at the wick right here, this is not a bearish looking candle, and what it tells me is that this rally still has some fuel left in it, and essentially what have we done? We've reclaimed one major weekly level. I did tell you this was 180 was a big level. We came down, retested it, and smashed right through. We closed the week above the next support level, which was 200. We did come and retest lower. We came and retested around 190, but we moved up again, and we have the next big resistance is about, I think, 5% up from here. But we've had a very strong weekly close. Even if we look at this entire range, price has closed above it. If we can look at some weekly levels over here, maybe I can highlight this weekly level right here, the 215 level, and you can see that currently that's where we're finding support. So this does not look bearish on a higher time frame by any means, guys. Just look at the wicks and look at the way price has shifted. And if we look at it on the 4-hour, you can see we've had very clean sideways consolidations. The first one lasted a week. We moved out of it. Then we spent another 2 weeks in consolidation. We've just basically been stepping up. The third consolidation was the longest. So we had a week, then we had 2 weeks, and then we had 3 weeks of a consolidation. Yes, what I will tell you is that the moves are getting smaller. So this was actually drawn this wrong. Just a second. 22% this consolidation, and 17, and this last one was 12% move. But basically we have very cleanly moved up from here. Last week we were looking at this 200 level, and we were looking at this level to find support. We did break down below it, but you can see price did something very similar last time before making that move up. And if this was the level you were managing your risk from, price did reclaim it again, so it was easy to manage risk again and be looking for upside. And basically we have moved out. We had a strong move out of there, and we built another consolidation. But you can see, you can just ignore this wick. This is a glitch by TradingView. I hope they remove it. But you can see that we made another consolidation right here, which we have broken out of. So we made another consolidation over here, and we have broken out of it. And essentially, if you compare this consolidation right here, so I mean, we could be in a similar space. We do not know how far this move can go, but we have a nice level at 233, which is another 5% up from here. So if you aren't already in, you should watch for some lower time frame structure and manage risk, because this weekly close is good, guys, and it looks like what I was saying, what a 50-day move in risk on assets, that is still looking like an accurate time period. The halving is near for crypto as well, so there is decent probability for volatility right here. So basically, if you look at the 4 hour, if we look closer, so this 215 level has been flipped into support right here. So if you do get a correction, if you do get some kind of a correction, I think this could be a decent level on a lower time frame to be managing risk for, if you are looking for upside. And conversely, I think if this consolidation level is lost, I would say about 200, 211, 210, if this level is lost and retested, you can start looking for a process to at least first retest these highs. But to really look for downside, I would like this 200 level to be lost again. So, but for now, this does look bullish to me, guys. This weekly close, I think, was very good, and we are likely to get continuation and possibly a pump into the halving. So here's the altcoin market cap. Now I must say it has been stair-stepping absolutely beautifully, respecting the levels that we have drawn out very, very well. Last week we did highlight, it came right back down to test this 63 billion support and smashed right back up and went up and tested this major level. I highlighted the importance of this level last time, this 75 billion level that we had found resistance above, and essentially that's where we found support before the big move down. So the 75 billion was a big level, and look at all we've done on the weekly time frame. Tested 62 and failed at 75, and then we've tested 68 as support and moved back above. So the next level we have right now to manage risk is right here, the 75 billion level. I think if this is bound to hold, we are ready to make the next move as well. If this level is bound to hold, it is actually very close to where price is right now. But like I told you, the price has been finding less resistance as we are going up, and you can see that by the size of the wicks each week. The wicks have been reducing, they have been getting smaller, and we have another level to manage our risk from. There is no need to always get overly bullish. You have perspective, you find places where you invalidate your setups. But I mean, right now I don't know any other direction for this, guys. If you look at these daily candles, price has just been grinding up. Look at the last time that happened. We had 1, 2, 3, 4, 5 daily candles grinding up, the sixth one, and then we had a big move. So this is a pattern. This is a pattern in forex as well. You learn about it, where you just have this slow grind, but the bulls are winning every day. Slow grind up, and eventually what you get is absolute lack of supply and a big spike up. So I think something like this is very probable, and even if it isn't, I think on a daily time frame about 75 billion is a decent place. I think the lows that we set yesterday on this on the altcoin market cap chart, they're a nice place to manage risk, because if it is we are doing something similar, you could see price maybe make a SFP from this level, but you could see that this level would possibly hold, and we can get that continuation that we are looking for. But again, this chart just it's so well defined, and it's been moving up so systematically, then it's been an absolute delight to be able to see how. And the best part is, guys, that all the way up we haven't had overly bullish sentiment. People have been doubting this rally all the way since the bottom. I think over here there was technical setups that would consider that we are to be getting some kind of sideways, but I did show you this channel and did mention that once price is moving out of it, we should be looking for upside, because that is the setup that has been successful for us in the past, and it is very clean, this channel. This time we did come back down and break below it, but as soon as we were outside of it, we were also finding support at these major yearly open levels, and since then we have just been moving up. I think we've made a 20-25% move up from here. Oh wow, it's about almost 40%. And essentially it was BTC all the way till the first week of April, but since then you can see we've had a couple of big impulses. The platform coins have done well, and I think now it's time for the broad market to start doing well. We've seen mid caps do well. If you look at the Subverto profile, we have posted some charts against BTC for coins that are breaking multi-year consolidations, so that is also a reflection that the market is ready to print some kind of bullish week or two. And if you look at the 4-hour, this is a bit annoying what TradingView has done, but you can just see the grind on the 4-hour. But yesterday what we did was we had these tops, we broke out of them and basically retested them as support, and again we have moved up. So I would say somewhere around these lows right here, the 74 billion is a decent place to be able to manage risk if you do get some kind of downside, because you can see that this has been quite a big move, and we got only a 382 consolidation from it, and that is very bullish. And from there we have had continuation, and currently we're consolidating over a major resistance level, which can now turn into support. So this impulse is very legitimate, guys, because this is when I posted on my Twitter, because we had such a big move and a very shallow retrace. Generally when you get that, it is impulsive in its character. It may not seem like that because it has stepped up, but like I showed you on the daily time frame, this does look like it can have possibly a day of consolidation, but that impulse is very possible that we can derive that impulse from this kind of a move. You want to look at it on a lower time frame, you can see, guys, this was the last time we stepped up from a major consolidation. We made a shallow retrace, and then we had another day of possible sideways, and then we made that impulse. So currently to me it is looking quite similar to what we have done before. I would like to see how we retrace here and how deep we can retrace, but definitely still looking for upside until some previously created support levels are taken out. So guilty until proven, guys, and this is just how we have to play these markets. Do not allow your bias of what is happening in the world get in the way. Here's BTC on the 4-hour, and you can see basically we've had what you could call a channel. Let me draw a potential price channel right here. Let's see if it works out. So I mean, it's not completely accurate, but you can see that we've been moving. um, if you flip this if you flip this channel into a horizontal, it basically looks like a consolidation, where now we are testing the top of it and essentially ready to break out, but we've been moving in a very systematic manner, and apart from being within this channel, we did break out of this previous resistance, and we turned it into support right here, and currently we are trying to break out again, so it is quite a clean support and resistance flip. If you want to look at the retrace of this entire move, you can see that we made a 382 retrace. Again, that's what I was talking about on my Twitter, that it is pretty bullish to get an impulse like this. I think it's a good 10 to 15% impulse. Yeah, it's a 15% impulse with a very shallow retrace. So when you see this, guys, when it's breaking a previous level and it is finding a major resistance, but yet price is not breaking down. If you were looking on the if you're looking closely at the applications that we have, like Trading Light and Tensor charts, you'd be able to know that there was a lot of demand down here for BTC, and all the big money was trying to front run each other. But essentially, for now, this is still a grind. Outside of here, it is not anything impulsive that we have found. But if we are to go by the hot market cap chart, yes, we can still continue to grind, but eventually, if we do end up finding support, I think above the 77, we have some upside targets right here. Here's the yearly pivot and a big monthly level. It's 8300. We expect to get some kind of a reaction from here, possibly even all the way till 8400. And I would say that if we do again find a decent retrace and hold, something like a 618. So if we get a move to 8400 and come back down to this monthly and hold the 7700 level, I think BTC would still have one more move to head to this CME gap level, 9000, 9100. That is a potential target for me for the next couple of weeks pre-halving. If this is to get impulsive and continue, catch a big move over here and find support at the 7700 level. But this does look like a stair-step move up right now, guys, with a very shallow retrace, and price basically held this level for almost 3 days. And which direction are we moving from here? Up. So for BTC right now, that is the plan. You look on lower time frames to catch some kind of a retrace. If you were not in the Slack, I was mentioning catching the bottom, we were looking at this move up as well, and essentially trying to catch whatever kind of dips you're getting to move up. And again, it's not the Slack, sorry, it's the Discord. I did mention last week we'll be opening for the public, and we are just preparing some nice material for you guys, so that when you do come, you have some interesting ways to engage yourself. So that's taking a little bit more time than I anticipated, but I'm sure once we do open for the public, it will be worth your while. Moving on to traditional markets, we are looking at the Dow Gold chart on the daily time frame, and essentially what you can see over here that you cannot see on the risk on charts is that we've made a lower high and a lower low on the daily time frame. So we had this move up, and currently we made a lower high and a lower low. So this is indicating weakness, and essentially that is what I was pointing out on the daily close. But of course, even then you still need place to manage your risk, and you do need to look at the risk on assets and define how it is that this is to be played. Like I told you, I'm still waiting for that 50-day window, of price to be able to do this, because statistically it has been able to do that. So I am still thinking we could possibly have somewhere till the 10th or 12th of May, but within the next couple of weeks, this weakness that is being seen in the markets, it will start not only reflecting on the weaker markets, but also the strength will start to show that it is weak. So for now, this is what I wanted to point out. In the Dow Gold chart, we've had a lower high and a lower low on the daily time frame. So essentially, it is possible for the next week or two that price continues to grind in this chart, and the strength in the markets continues to prove itself, and until this overly bearish sentiment is wiped out, and people who are doubting unlimited QE, as much money being printed as what is required, to save the economy, I do not think it's wise to bet against that until price starts to prove itself. So, but for now, this is significant that this is showing that there is weakness in the market, and we will look at other metrics that are reflecting the same. That this bounce up here over the last week has gotten much weaker than what you can see on the index. So here's another way to be looking at market breadth, and you understand the broadscape weakness in the market. What we have is the Nasdaq right on top, and we have the Russell, the small cap index, and we have a couple of sectors, industrial and financials. So we can see we've had 3 peaks on the Nasdaq. One is the 26th of March, and the 9th of April was a correction. You can't see it on a closing basis. And the third one was the 17th of April. And if you see in the other 3 indexes, we made a higher high, higher low, a higher high and a higher low. The third high on the Nasdaq, it was not followed by the weaker sections of the market. So what this reflects is that this index, that with the stocks that this index is made out of, it is weighted very heavily in one way or another, and the heavyweights which are present in the index, they are pulling the index up. The Russell 2000, it is more balanced in terms of its weightage, and so are the sectors. So you can see that the broad market was not making new highs, but these certain sectors and certain stocks which have been moving really well, they've been pulling the index up. Another thing I want to show you is actually the difference in the bounce. So this is just on a closing basis, but it's relative, so we can see that. So we've reached the 6.6 level on the Nasdaq, and you can see the Russell from the top, from the crash, essentially it's just about reaching the 382. So this is not what you want to see when you are trying to catch a rally, guys. Like when you're trying to think of a reversal, you want to see the weaker sections also being bought up. That's the sign of breadth. That is the sign of entire market strength. When everything is being bought up. Right now it is just specific assets and which have very specific use cases that are keeping this market up. Essentially, they are based on internet technology. You've got your Zoom, you've got Amazon, you've got Shopify, you have Netflix, just everything. And of course you have healthcare, you have biotech, these are the sectors that are essentially pulling the market up. And why not? The thing is that we are having a paradigm shift, and everything that is antisocial, everything that does not require crowds to be gathering, is what is going to progress in the future. Because what is happening right now is something that is going to shape the future of humanity, and whether people realize it yet or not, it is true, and the markets are reflecting it. So, but anyway, the thing is that this bounce that we've had yet is still a bounce, as is not proving itself. What we need is the broad market to start reflecting that this bounce is a continuation rally, and for now that is not what the case is. So still, guys, the prerogative remains the same. There are quite a few metrics that are showing that there is weakness which is appearing in this bounce now, but it can take its time to manifest, so we should wait out, but the early signs are there. So here's a quick look at the VIX. It is down to 35, and I think people are still overly celebrating. But this is the CVOE volatility index, but what it reflects is the fear in the market. So if we look at 35 VIX, what does it mean? Here we're looking at 911, and the bottom of this is currently at close to where the highs of 911 were. So do you see that level of fear around you right now? I think what we see right now is still complacency on a lot of people's part, and I would say that it is only safe once we break down below, I would possibly 22, 23 weeks. That's when the fear would have subsided, and that's when the markets would begin to act normally. Right now, the markets are not going to act rationally. A lot of technical analysis is not going to work the way it does when the conditions are normal. So I think it's very significant. But what is most significant is that the VIX is still very, very high. Even though from the levels that it did reach, it relatively seems like it is low. But the VIX is still very, very high, guys. And I think the crowd and the psychology of the people is not reflecting this high level of fear still, And what I want to show you now is some statistics to do with the virus and what are the potentials going forward. Because what you will see is that all the smart funds, they did price in a bounce. Everybody knew that the markets are going to get a bounce. It can be a decent bounce, and we have played out that scenario. And now for everyone else, the game plan is to actually look at the statistics and look at the numbers and try to understand where do we go from here. So I'm going to look at a couple of things and try to gauge the same with you guys. And if you have any thoughts on this, please talk to me. Please comment on our YouTube. Please comment on our Twitter, so that we can come up with this healthy discussion and try to think about what the implications of this virus are and what is the direction that we are headed in. So we're looking at the coronavirus death tolls right here, and you can see the general trend is that a lot of countries have peaked. We do not know about the US, but you can see that it is a rounding top. So it is potentially a possible peak as well. UK is looking like it has peaked. Italy, I think it has been quite a few days. The same with Spain and France. A few countries are still growing. India, Brazil, Norway. So, but all in all, you can see that there is a possibility that the death tolls in general, if you take it worldwide, they have peaked. So for this wave, whatever we would call, if we would call this as a first wave, this is the general trend. Now what we're studying is the other pandemic that we have some statistics of, which is the Spanish flu. And essentially, this is the first wave, and this is where it is possible that we are. It is a potential possibility that the nature of the waves is going to be different, but what you have to understand is that the flu, um, after the first wave, we had another wave in the winter, and essentially this wave was possibly 5 times bigger in terms of its death per 1000 persons. So what else we see is there is the Dow Jones Industrial Average, the stock market as well. And essentially what we did is for this 3 month period before the next wave, we actually even rose. Price went higher, and once the death toll really started rising, you saw that there was a big crash in the market as well. I mean, it was big for that time. It was essentially a 10% crash. So what I was talking about before was that this first wave has been priced in by the market, considering where we are, and it is to do with where we are right now. So this first wave is priced in, and if we are here, there is a possibility we can easily consolidate, keep moving. But since we do not know, the nature of the virus is not known. No matter what you hear, it isn't known how to deal with it and how to tackle with this situation. So until it is not known and we do ease up norms to save the economy, there is still a potential to play out what has happened before. It does not need to be so extreme, but this can carry on, guys. This is what the previous pandemic that our planet has had, this was the shape of it. It came around, and the next time it came around even harder, and it did even have a third wave. So it lasted for more than a year. And what I would say is that not only that, like, there are so many similarities from that time to now. Similar kinds of ignorance by the people and similar kinds of misunderstanding. Yes, we do have technology. Yes, the internet is here now to connect everybody, but people are people, and you have similar levels of stupidity. People who know nothing about it want to give their opinion and want to be an expert. But essentially, just to give you a certain perspective, this is potentially where we could be. So not only in your life, and not only in the markets, but also in your life, you should essentially have an open mind to the potential possibilities of this. Everybody's thinking about a vaccine. It cannot be less than a year and a half, at least from what I know. I am not the medical expert, so I cannot say. All I can show is past performance, because being a technical analyst, that's what we can do. And this is the past performance that we have, and with the market overlay to it, you can know that it is a potential that we can be in for a sideways grind on these markets for a while, till the market can actually price in what has to happen with the virus. So it's going to be a wait and watch. You don't need to jump the gun. You can carry on trading low time frames, and do stay safe, guys. I will show you another bit of statistics to do with social distancing for 1918. Let's quickly look at that. So here's some more stats from 1918, and this is basically after the first wave. Cities that ordered social distancing measures later and for shorter periods. Look at the spike in deaths in all these cities. And here at the bottom you can see cities that ordered social distancing measures sooner and for longer periods. So you can see much slower infection rates. Look at the numbers right here. And basically, statistically, we have only the numbers of the US, but you can you can project these for anywhere. Look at Pittsburgh and Philadelphia. I think Philadelphia had a parade, I think 5 or 8 days after the pandemic hit. And basically look at what happened there. It was a huge, massive spike. But this is a reflection of the conundrum that the government has right before them, guys. It's pure economics that they have to ease the measures for. It is for economics. It's for the economies to survive. You have to understand, a lot of emerging economies cannot afford their working population to be sitting at home. They simply cannot afford it. So this is the price they have to pay for it. So this is a very, very difficult situation, and we will have to see, which places, how it works out, and we can hope for the best. But again, this is what we have. This is all we have. We just have statistics from another situation and another pandemic that has happened before. There's very little statistics. We cannot necessarily say they're purely accurate, but they do have certain numbers which support that social distancing measures are going to help. Opening up everything later is going to help with the deaths, but we do not have the exact economic statistics because economics was very different then. But we are going to have to wait and see, guys. Some places are going to be forced to open early, and they're going to have these continuous spikes again, and some places will have the luxury where people can stay at home longer, and I think they will have a situation where the population is preserved, and the sentiment in the society is preserved. So it's a very, very complex situation, and let's see how this pans out. But essentially, this is good proof that keeping things closed and having strong measures of social distancing can really help, and the longer the period is, the better it would be to deal with this thing. The only thing is that if the longer this stays like this, there's poorer countries where people will possibly die of hunger, if they continue the same way. So extremely difficult to gauge how this has to pan out, and this is essentially what the markets are going to be waiting for after this bounce. They're going to try to figure out and try to front run this information. The markets are not always right, guys, so we should know that as well. But they're going to try to front run this information as to how this pans out, that if we are in this declining first wave, how the second wave is going to pan out, what is the economic implications of this. So it's something to keep in mind, and just wanted to show you some things from 1918 so that you do have a perspective of what is possible and what are the potentialities going forward, and how to use that to be able to play the markets, and essentially the plan should just be this, guys, to wait for the weakness to prove itself. If it is, stick to low time frames, wait for the VIX to get back to 21 and below so that you can trade under normal situations. Because what I would tell you is, the people who are thriving in the current situations, essentially they are specialists. Somebody who's a specialist at gold or specialist at oil, or a specialist at scalping, those people will be doing well in these situations. But if you're trying to use your regular strategy when the markets are totally in a different frame of mind, it is going to create complications in your trading methods and what is the result of those. So I would say, preserve your capital. There will be the opportunity of a lifetime, whether it is now or in a year. You can basically be buying potentially something that is the beginning of a long bull run. So just stay safe, guys, for now. Learn a new skill, read a book, stay safe. Quick look at gold. This is where we were last week, and essentially I was talking about this to be a nice place to end up managing risk. We smashed below it. It was a nice top run and a reclaim, Quasimodo reclaim. This is a nice place to buy back with managing your risk, and I think for now gold is still looking decent, guys. It looks like it could print a longer consolidation pattern, but it is still consistently holding and making aggressive retraces and looking ready to attack this. If 1700 is taken out, we have a lot of room to run. The 1770 level, this quarterly level, once it's taken out. But still, gold's price action is still decently bullish, holding shallow levels of retrace and carrying on, from here. So I hopefully should be in already, because this is a bit late, and it's looking like we do end up building a stronger consolidation pattern. If we do end up coming here, you can still take a long position managing your risk up here, but for now, gold is still looking. Here's a quick look at oil. As expected, it's getting smashed again. Basically, I said this range is still very valid, and what we did is we came back up and tested close to the middle of the range, but it was a 786 retrace, and also we had a bit of a stop run here. So I do think it's going to at least come back and test these lows. But considering the fundamentals of oil, there is absolutely a lack of space right now, guys, to store this, and demand is not coming back anytime soon. So this is a very, very complex situation where it is expensive to store because it's a physical asset. It requires that space to store, and that is what is reflecting in this market, and that's what the market is trying to price in. So that can carry on, and apart from that, I think everybody else who is trying to invest in oil-based ETFs in the long term, I would suggest that you avoid that, because historically what we know is from larger corrections, whatever does end up needing support from the government is never the leader coming out of the situation. That was what the case was in real estate in the 90s. Even tech, it took 7 to 8 years after 2000 where they got support. It took 7 to 8 years before it became the leader again. So the energy industry is anyway quite destroyed. So getting into something that will require so much government aid, it does not make sense. You should still look at the leaders. Look at semiconductors, look at Amazon, look at Shopify, look at healthcare, look at all internet-based businesses like Zoom. These are your leaders. This is what is going to survive in this and thrive in this environment, where eventually, with the amount of fear that it can create, if we do get the second wave, people will get conditioned to stay away and be away. And everything that can thrive in that environment is what is going to thrive. So keep a lookout for that. But I think oil is going to continue downwards from here. Essentially at least $10, and then we have to see, because there is a really complex situation. Cushing, the place where oil is stored, is nearly full. It's very, very close to being full. So it's a very unique situation. I don't think they know down there what they can do. So it's going to get costly to store this thing now, So essentially you should be looking at the negative levels and how costly it could get to store oil if demand does not return. But nonetheless, very, very interesting times. Never thought we'd be seeing something like this on this chart. It was a really historic day. I was watching it live with my friends, so it's very interesting, and I would just say stay safe, guys. Like, this is how unique this situation is, and I carry on saying it. Just don't be complacent, because we do not know the shape of this thing. We do not know much about it even now. So all you can do is protect yourself and your family, and figure out ways to sustain yourselves for however long this has to carry on. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!